What are some tricks to wealth building that few know about? It isn't so much that few don't know about things, but that few implement some of these things. 1. No need to reinvent the wheel. Many people assume you can only get rich from being smart. You need some great strategy or need a lot of money to begin with. But actually, tried and tested wealth management solutions work just as well today as 30 years ago, or 100 years ago too. REITs at 10% allocation to REITs can slightly increase returns and lower volatility at the same time in comparison. Government bonds reduce volatility, but also reduce returns. That doesn't mean neglect bonds, but REITs are a great alternative to direct real estate. 3. Turn off the TV and ratings. Many people know that market timing and stock picking, for DIY investors, doesn't make sense. But why do many people do it? I honestly think that online valuations and the media contribute to this. 50 years ago, people didn't have online valuations or 24/7 cable news. Now people can check their valuations online. Is that a good thing though? People are more likely to panic if markets are down. I am not suggesting they don't have these things, but the individual should know that being passive beats being active. Just buying and holding is best. Celebrate market falls. Most people want great returns, but remember two things. Firstly, nobody knows which years or decades will be better or worse. However, if your best returns are later on, you will make more money. Investor 1 makes 15% per year for 15 years, then 2%. Investor 2 makes 2% per year for 15, and then 11% from years 16-30. Investor 2 will actually make more money, as the good returns are coming when the account is worth more. If you start investing $1,000 a month, and markets rise by 20% for the first 2 years, you are making 20% of a small amount. If you make 20%, in comparison, in year 2, you are making 20% on a big amount. So if returns are weak for a period of time, that is good for the long-term investor. From 1960 until 1990, returns were 10%, but 0% inflation adjusted from 65 until 82, in the US. Again though, that was just an opportunity for the long-term investor to buy cheaply, until markets performed incredibly well from 82 until 90 and beyond.